So far as the quarterly earnings are concerned, for the first quarter, we saw Nifty earnings grew by 4%. Large cap Nifty large cap 100 grew by somewhere close to 3%, and mid cap was about 6%. Small cap 250 was about 16%. So these numbers, on the face of it, with the exception of small cap, the numbers look pretty subdued. But what is important to understand, two things. One, this was broadly in line with analyst expectation, so it was not earnings are in line. And the second thing is that for the same quarter last year, which serves as the base, was a very good quarter for all segments with the exception of small caps. Other segments, the earnings had grown by 30% kind of thing, and for small cap about 6%. So from a high base for large cap and mid cap, 4 to 6% growth was quite a bit of a satisfactory number. Now the result season for the current result season, that is quarter ending September, the analyst expectations are slightly subdued. After the impact of election in the first quarter, in the second quarter also there were some level of weather disturbances and other factors also. That seems to be impacting, and the early part of the festive season also has not been very good. So the analyst expectation for the second quarter, that is quarter ending September, is not particularly positive. So given that the earnings numbers for the first half is likely to be slightly lower than expected as compared to what was being thought before the start of the year. But our sense is that most of these factors are cyclical factors, and therefore in the second half we are likely to see earnings recovery. So in view of that, I would say the earnings numbers are, as of now, there is not much reason to be worried about the earnings. See, our sense is that our target for March 25, that's the target which we had given for Nifty 50, was at 26,000. Obviously, market had gone ahead of that and now has come back. And if you see from this level, it looks like for March 25 there is a 4-5% kind of an upside. So which is pretty modest, but from a 12-month perspective, we still maintain a 10 to 13% kind of Nifty upside. So in that sense, this will be in line with the long-term average. Obviously, you cannot compare it with the current prevailing one-year returns, which are significantly higher than the long-term return. So in that sense, yes, we are positive on the equity market, even from a 1 to 3 year perspective.